First up today is despite higher mortgage rates, guys, inventory growth is still slow. So weekly active listings rose by only 4,401. Mortgage rates went from an average of 7.19 to 7.37, and purchase apps were flat last week to week. What the heck are we going to do?
Jesus, what are we going to do? It almost seems like the redundancy here.
Yeah, I know. It's kind of like going on the carousel round and round a little bit. But, we're in the 7 range. I talk on Monday Mortgage Minute about the 10-year yield, and we talk about how that's going to impact rates and how money comes into mortgages or mortgage-backed securities or out of mortgage-backed securities, make them expensive or cheap. But this is clearly a problem.
Yeah. Absolutely. We're going back to sellers just being hesitant. Mm-hmm. They want to be on the sidelines. Why do I have to sell right now, especially with these higher interest rates? They were high already in the 5s. When they're in the 5s, people were hesitant.
Yeah.
Now, let alone we're in the mid 7s. As a seller, I'm going to relook at my things. Do I really have to move out there?
Well, even just simple math. Like if someone was at 2.5 and then they see 5, you're like, that's already double in their mind, right? Even though I know it does not proportionately double when it comes down to the rate, the monthly payment. But in their mind, they're like, oh, I'm at 2.5, I'm going to 5. It's crazy. Now you're trying to tell me 7.5. Now it's 3 times where I was at.
Absolutely.
It's like, I don't know about that.
Yeah, I mean, we're here. People have the golden handcuffs on, and everybody has a sub 3% rate. So for them, it's like, why am I going to make a move when my payment's so low? And houses are only double the price that they were when I bought this one. Yeah. Rates, I mean, look at the way that they are. I'm staying put.
And you know what? I think this is something where, months ago we started talking about how this is all going to be the needs-based economy when it comes to real estate. It's like I need to this or that because of this or that.
Absolutely.
And I think we're just going to see more of this. The forecast is that, obviously active listings have been down year over year for a couple of years now, actually lower now in 2023 than they were in 2022. And that was even lower than they were in 2021. Now, I'm not saying it's going to find a rock bottom and become zero. It will not be because people are living life. However, the amount of volume of homes coming onto the market is going to be paltry at best for, I think, the rest of 2023.
And I mean, we're going already into the slowdown periods of the real estate market towards the end of the year. So even more of a slowdown period that we're going to start seeing people with holidays and everything probably holding off until next year to see how the market performs. But I feel that in that pocket, there's still going to be some really good opportunities if you're able to just, play your cards the right way.
Absolutely. Yeah. 100%.
I think this is like that double-sided coin thing where, you start to get to this part of the fall where you go, okay, people who are still serious about getting in a home, it was like their goal of 2023, like they're going to press ahead. They're going to be like, have a little more grit and persistence, and they're going to make it happen. They're going to find something, and there's going to be someone who has to sell a house because of whatever need they need to. Then there's going to be others on the other side of the coin. They're going to pump the brakes probably and go, you know what, let's revisit this in the new year. And new year doesn't mean January 1st, by the way. New year usually means into February, maybe March or that spring season where maybe there's some more choices. We've got another 6 months under our belt, and then we can make a better choice.
Yeah, the other thing is we have elections coming up, right? And so we already know that's another thing that actually persuades things.
Yep.
That actually makes, hopefully, interest rates kind of, let's start going down. I don't want a president have all these high rates, you know what I mean? And so
one of the things that I have been noticing is that everything's based off the sentiment that the reports, come out and say. So if the connotation of what the message is good, people are going to say, okay, that could be taken as, positive information that rates are going to come down. But if they come and say like, hey, we still aren't done here, we could continue to see rates to continue to go high and keep course.
Absolutely. I think September is going to be that key point. I mean, I think by September, we're going to know if we're going to call, the Fed's going to like really display their shot. Like they kind of already called their shot, and they've been, raising rates since March 2022. But I mean, this September meeting now has kind of everyone's attention. They're coming out of the Jackson Hole Symposium meeting that they just had. Now they're going to go into September while collecting all the data they were saying last meeting they need to make in this upcoming one in September. And then we're really going to see how the cards are going to fall.
All right. Rates going up.
Rates, I feel, will remain where they're at, and higher chances of them going up than them going down.
Okay. Fed increasing rate?
The Fed will increase rates probably in September by another 25 basis points. That's my current bet.
Last year when they met at the Jackson Symposium, wasn't it around the same time? And then into the following months, October, November, we saw the highest rates that we've seen for 2022. Until they started to come down a little bit into the December early years and then spike right back up when we got into the beginning of the year where buyers started getting back into the market.
Well, and remember, it was not only when they were thawing out and coming to the market, but February is when we started having SVB and the other bank issues. And it's like, oh, now we have a systemic risk. But they also, remember, we had made the point, they can't take their foot off the gas pedal because then they're admitting that the systemic risk is a bigger deal than fighting inflation. So they were caught and cornered in that situation, which we're not facing now, I don't think. But the recent downgrades of other banks is now going to be a problem going into the end of this year and 2024. Guess why? Because of the same reasons that SVB had some failure points too, which is the Fed keeping rates so high is really causing those bonds to lose value tremendously. And there's only so much time these banks can hold on to these at those underwater levels before it starts to become problems on their balance sheet.
Yeah, no, that's crazy. So I mean, inventory is still low. We still have a lack of new construction. We have a labor shortage. A lot of construction workers aren't going back to this workforce.
Well, funny that you say about the home builders. A lot of people right now, I'm noticing that rather go into wanting to buy a new home because they're saying, hey, well, it's brand new. I'm already spending this much on it. Might as well get myself a brand new house than something that's been, built for years. So that's something that I am noticing where people are starting to submit more applications or show more interest towards new builds, but then at the same time hold cautious because it's not always, the best decision down the line as we've seen. Even builders are facing a lot of problems. Houses aren't getting done when they need to be done. But still, I mean, it's something that I have been noticing a lot. Yeah,
and personal experience, you think everything's good. It's a brand new house. Yeah. I bought a few properties brand new. But what we don't realize is now I have to do the yard. And then when you get the yard, you have to get some type of contractor, landscaping contractor, in order for you to submit your plans to the homeowners association. So that costs some money, almost like having an architect. Oh, right? Yeah. And then you're doing all the other work, and next thing you know, like, oh, this is around $140,000.
Starts running up.
You're like, okay, with inflation the way it is that the best decision to make right now?
It's a simple comparison to the stock market, right? You're buying at the highest, and when it drops, you bought at the highest, and then now you're going to have to wait a long time for it to go right back up,
Yeah.
So it's about identifying the right deal that makes the right numbers, because even in this market with the rates how they are, with the numbers the way that they are, if the numbers make sense, the numbers still make sense.
Yeah,
and
exactly.
That's all that needs to really happen.
Yeah, the funniest thing, going back to that story, when we had dirt backyard, right? Because we thought we were going to go in there and just get, hey, you know what, we're going to fix it up. Kids would go out there, and remember, I had Christian, Ashton, and Dylan.
Ooh.
I mean, Christian, Ashton, and Devin. They'd go out there. Next thing you know, it rained. They're all muddy. I'm like, stay out there. You know what I mean? It's like, because it's all dirt. It's like, but I mean, these kids are just nothing but kids. They want to play. And so that makes you want to get the yard done sooner and just get more in debt.
So the mud made you motivated.
Yeah, that's what I was saying. Well, you're talking about carpets. Now you're talking about the furniture getting all dirty. Yeah.
And you know how I am with my
OCD. OCD.
Go outside, stay outside.
Here's the hose. Don't come back into it.
Well, last thing on this, guys, with inventory, obviously watching this into the fall, going into the winter, just for perspective, I want to lay this out there so we can come back and watch this later and we'll see what happens here. But, week over week or week, this week in the year compared to last week in the year, 2023, there's 60,295 listings. In 2022, there was 68,167, so 8,000 more. And then in 2021, there was 80,898. So a substantial drop off from 2021 to 2023, comparing week over week or week to week of the same year. So 20,000 fewer listings in 2023 than this same week in 2021. Wow.